Good morning and welcome to my final batch of morning report chart appraisal videos of 2014 with me, Rich Perry, market analyst at Handtech Markets. It's for Monday the 22nd of December. The European markets again have started very positively. The sentiment just generally around the markets is pretty decent again. You've got the oil price, which has formed some support and looking to push higher. I mean, you've got Brent crude up over 1%. WTI also 1% higher, so we've got some decent support that has come in, and that has certainly helped to drive the sentiment more positively through the equity markets in the last few days, and that has continued into today. Asian markets strong overnight, although the Nikkei was basically flat. It had a bit of consolidation in the yen, but pretty much everything else was up, and into the European session the FTSE's up over 1%. DAX up also 0.8% as well. So FTSE interestingly continues to outperform the DAX, and I'll talk about that a bit more in my strategy weekly report. The strategy report that I do every week called the Weekly Outlook. And that basically suggests that the weighting of the FTSE 100 is far more behind the oil stocks, and they're actually oil stocks are not really have any exposure to the DAX, so that's why the DAX has been lagging slightly in this rebound behind FTSE. But what we have got has been also on these charts, wrong one, there you go. The dollar index has just slightly retreated from poking up to a new multi-year high on Friday, but nothing too significant. I think there's a bit more of a consolidation in these dollar charts. I mean, you've got the euro, which is 0.3% stronger, about 30-40 pips, which is why the dollar index is down. But then you look at sterling, which is flat, and you look at the dollar yen, which is strong. So pretty much mixed bag across the forex charts. In terms of the volatility, I mean, I spoke last week about the fact that when the VIX starts to fall away, you'll see this rebound, and that's what we've seen in the last few days, really, and that has been one of the drivers behind this stock market rally that we've seen in the last few days. Into today, there's not a great deal out this week at all, really, but I mean, you've got the existing home sales for the States at 3 o'clock. It's forecast to come in slightly down from last month. 5.20 million there is the expectation for the annualized figure there for existing home sales, but nothing too significant on the downside. But yeah, throughout this week, we're pretty much tying up just a few loose ends on the data, so there's not going to be too much to impact on the markets, and you'd imagine sentiment should remain fairly positive if this oil price remains supported. I did say earlier that sterling is basically flat and the euro is up against the dollar, and my chart of the day reflects that. It's the euro sterling chart, and this is euro sterling over the past 8 months or so. We've sort of seen in the last 6 months, we've seen euro sterling basically just form this big range sideways. It could turn out to be a base. It could also turn out to be a continuation pattern to the downside, but at the moment it's sort of not far off the bottom of this range, and what we've seen is just nothing really to suggest that there's going to be any imminent breakdown, and the momentum indicators are pretty much all pointing towards a continuation of this range, and that's when you actually look on the intraday chart, you actually see that the recent low that we saw on Friday at around 78.09 has been coincided with a bullish divergence on both the RSI on the hourly chart and also the MACD lines. So we've started to see a bit of a recovery today, and I think if euro sterling can get above the 78.58 mark, then that would certainly complete this momentum reversal that we've got. That would certainly suggest that we're pushing higher, I think, back within this range, and then you'd be starting to look higher again. So it looks like we could be set for, maybe if we can break above that 78.58 mark, then maybe back above that 79 big figure level. So it just looks like we're just prepared preparing for a little bit of euro outperformance against the sterling at the moment, certainly according to this euro sterling chart anyway. So I wish you good luck in your trading today on all your pairs. I think the markets are going to be fairly well set in terms of positive sentiment towards Christmas. I think potentially this Santa Claus rally could well continue. There's little reason at the moment, and I say at the moment, for this rally to stop, unless there's going to be some sort of exogenous bit of news flow that comes out. But at the moment, it all looks fairly positive for risk appetite. Anyway, I wish you good luck in your trading today, and I'll speak to you later. Thank you.